Good afternoon and welcome back to the continuation of the hearing before the Public Service Commission of South Carolina in docket 2022-1-E concerning the annual review of base rates of fuel costs for Duke Energy Progress. Let's take a roll call of commissioners. Present in the hearing room, we have Commissioners Thomas, Commissioner Powers, Commissioner Caston, Commissioner Belser, and appearing virtually via WebEx, we have Commissioner Williams. Ms. Brown, did you have a chance to talk with, say, CCL Council and see where we're going next?
We did, Vice Chair Belzer. I think that Ms. Mixon is going to ask a question.
Yes, thank you, Vice Chair Belzer. The WebEx invitation for the hearing ends at 3 o'clock, and so we wanted to, I guess, first get...
They're shaking their heads in the back. It'll continue until we finish.
Okay.
We're not going to cut him off.
Thank you, Vice Chair. And in that case, I think the company can proceed, and Mr. Lander will go after this final panel.
Okay. Thank you very much.
Thank you.
Ms. Brown?
Thank you. Vice Chair Belzer, the company would next call Mr. Brett Phipps and Mr. Jim McClay as a panel.
Mr. Phipps, if I could get you to raise your right hand, do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. McClay, if you would raise your right hand, do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth? Thank you.
Good morning, good afternoon, Mr. Phipps. Would you state your name for the record?
My name's Brett Phipps.
By whom are you employed and in what capacity?
I am employed by Duke Energy. I am the Managing Director of Fuel Procurement.
How long have you worked in fuel and fuel procurement?
I have 29 years of experience in the coal industry, and 17 years of that is experience in the fuel procurement area.
What is your educational background and what are your professional affiliations?
I have a degree in chemistry, and I am a member of the American Coal Council, the Coal Institute, the Lexington Coal Exchange, and the Southern Gas Association.
Please describe your responsibilities at the company.
As Managing Director of Fuel Procurement for Duke Energy Corporation, I manage the organizations responsible for the purchase and delivery of coal, and I supervise the procurement of all reagents. Until August 1st of 2021, I was also responsible for the procurement of natural gas to the company's regulated generation fleet. I participate in all aspects of the overall strategic direction and commercial management of the purchase, delivery, and storage of fossil fuels, and I supervise the company's coal procurement activity and associated transportation, including the negotiation and administration of long-term and short-term purchase contracts.
Thank you, Mr. Phipps. Vice Chair Belzer, given Mr. Phipps' extensive experience in fuel and reagent procurement, I propose to tender Mr. Phipps as an expert in the field of coal, natural gas, and reagent procurement.
Any questions or voir dire regarding Mr. Phipps' qualifications as an expert in the field of coal, natural gas, and reagent procurement? Hearing none, Mr. Phipps is qualified as an expert in the field of coal, natural gas, and reagent procurement.
Mr. Phipps, did you prepare or cause to be prepared 12 pages of direct testimony that were pre-filed with the commission in this proceeding?
I did.
If I asked you the same questions that were asked in your pre-filed direct testimony, would your answers be the same?
Yes.
Vice Chair Belzer, I would ask that Mr. Phipps' pre-filed direct testimony be entered into the record as if given orally from the stand.
Mr. Phipps' pre-filed direct testimony will be entered into the record as if given from the stand.
Thank you. Mr. Phipps, did you also prepare or cause to be prepared 2 exhibits that were attached to your pre-filed direct testimony?
Yes, I did.
Do you have any changes to those exhibits at this time?
No, I do not.
Vice Chair Belzer, I would ask that Mr. Phipps' 2 pre-filed exhibits be entered as the next composite hearing exhibit.
Mr. Phipps pre-filed exhibits attached to his direct testimony. Exhibits Phipps Exhibit 1 and Phipps Exhibit 2 will be a composite exhibit marked for identification as hearing exhibit number 8 and entered into the record of this case.
Thank you, Vice Chair Belzer. Mr. Phipps, would you please provide a summary of your testimony at this time?
Yes. The purpose of my testimony is to provide fossil fuel costs for the period March 1st, 2021 through February 28th, 2022, and describe the projected changes forthcoming for the period of July 1st, 2022 through June 30th of 2023. DEP's average delivered cost of coal per ton for the review period was $82.65 per ton, compared to $96.35 per ton in the prior review period, representing a decrease of approximately 14%. This includes an average transportation cost of $33.60 per ton in the review period, compared to the $39.38 per ton in the prior review period, representing a decrease of approximately 15%. The company's average cost of gas purchased for the review period was $5.34 per MMBTU, as compared to $3.72 per MMBTU in the prior review period, representing an increase of 43%. The cost of gas includes gas supply, transportation, storage, and financial hedging. DEP's coal burn for the review period was 2.9 million tons, compared to a coal burn of 3.4 million tons in the prior review period, representing a decrease of 14%. The company consumed approximately 170.3 million MBTU of natural gas in the review period, compared to 158.7 million MBTU in the prior review period, representing an increase of 7%. Changes in coal and natural gas burns were primarily driven by increased demand from the economic rebound experienced following the COVID-19 shutdowns and escalating coal commodity prices in late 2021 and early 22, which offset the overall increase in natural gas prices, reducing gas to coal switching. Coal markets continue to be distressed for a variety of reasons, and the coal supply chain experienced increasing challenges throughout 2021 and 2022 as historically low utility stockpiles, combined with rapidly increasing demand for coal both domestically and internationally, made procuring additional coal supply increasingly challenging. Coal producers have been unable to respond to the rapid rise in demand due to capacity constraints from labor and resource shortages, which drove domestic and export coal prices to record levels. The utility sector's declining demand for coal has also driven rail transportation providers to modify their business model to be less dependent on coal-related transportation, and the company experienced an increased delivery delays created by rail transportation shortages in 2021 and early 2022. DEP's projections for the billing period include approximately 2.4 million tons of coal and 158.3 million MBTU of natural gas consumed. These projections are subject to change due to multiple factors including, but not limited to: 1. Exposures to market prices. 2. The amount of Central Appalachian coal DEP is able to purchase and deliver, and the non-Central Appalachian coal DEP is able to consume. 3. Changes in transportation rates. 4. Performance contract deliveries by suppliers and railroads that may be missed. 5. Potential additional costs associated with suppliers' compliance with legal and statutory changes. 6. Changes in actual delivered fuel costs. And 7. Weather-driven demand. This concludes my testimony summary.
Thank you, Mr. Phipps. Mr. McClay, would you state your name for the record, please? By whom are you?
Just a second. Would you turn your microphone on, Mr. McClay? There you
we
go. Thank you.
Sorry, James McClay.
Thank you, Mr. McClay. By whom are you employed and in what capacity?
I'm Managing Director of Natural Gas Trading for Duke Energy Corporation.
How long have you worked in the energy industry?
For 24 years.
What is your educational background?
I have a bachelor's in business administration and finance.
Please describe any prior roles you've held that are relevant to your testimony in this proceeding.
Since joining Progress Energy, as an energy trader in 1998. I've worked in various power trading and natural gas procurement functions and leadership roles, including Director of Power Trading and Portfolio Management and Manager of Gas and Oil Trading. Following the merger between Duke Energy and Progress Energy, I was named Manager of Gas and Oil Trading for Duke Energy. In May 19, I was promoted to Director of Trading, and in August of 2021, I assumed my current position as Managing Director of Natural Gas Trading.
Please describe your responsibilities at the company.
Sure. As Managing Director of Natural Gas Trading, I manage the organization responsible for the natural gas trading, optimization, scheduling, procurement functions for the regulated gas-fired generation assets in the Carolinas, Florida, Kentucky, and Indiana, as well as the organization responsible for power trading for Duke Energy, Indiana, and Duke Energy, Kentucky. Additionally, I oversee the execution of Duke Energy's financial hedging programs, fuel oil procurement, and emissions trading.
Thank you, Mr. McClay. Vice Chair Belzer, given Mr. McClay's extensive experience in power, natural gas, and fuel oil trading and procurement and hedging programs, I propose to tender Mr. McClay as an expert in the fields of gas and oil trading and fuel hedging.
Any questions related to Mr. McClay's qualifications as an expert in gas and oil trading and fuel hedging? Hearing none, Mr. McClay is qualified as an expert in gas and oil trading and fuel hedging. Natural gas and oil trading and fuel hedging.
Thank you, Vice Chair Belzer. Mr. McClay, did you prepare or cause to be prepared 13 pages of rebuttal testimony that were pre-filed with the commission in this proceeding?
I did.
If I asked you the same questions that were asked in your pre-filed rebuttal testimony, would your answers be the same?
Yes.
Vice Chair Belzer, I would ask that Mr. McClay's pre-filed rebuttal testimony be entered into the record as if given orally from the stand.
Mr. McClay's pre-filed rebuttal testimony will be entered into the record as if given orally from the stand.
Thank you. Mr. McClay, would you please provide a summary of your testimony at this time?
Sure. The purpose of my testimony is to respond to the testimony and recommendations offered by Mr. Gregory Lander on behalf of SACE and CCL. Witness Lander has not recommended any changes to the company's proposed fuel rates, and his testimony focuses on the recent volatility of natural gas prices. He suggests the company should utilize a physical hedge to mitigate natural gas price volatility by building additional utility-scale renewable energy facilities, and he recommends certain changes to the company's forecasting practices. The company agrees that natural gas prices are volatile, and that is why the company practices both financial and physical hedging. For the review period, the company hedged nearly 50% of its natural gas volumes, resulting in approximately $11 million in savings for South Carolina retail customers. The company uses a phased hedging approach where financial hedges are executed over time for a percentage of the company's forecasted natural gas burns, with higher hedging targets in the first 12 to 24 months and lower hedging targets in the 36 to 60-month period. This multi-year rolling approach to executing fixed-price transactions provides a reasonable and prudent approach to mitigate price volatility in uncertain fuel markets. In late 2020, the company extended its hedging program from 36 months to 60 months to mitigate customers' exposure to future upward pressure on U.S. market prices. During its review of the program in 2021, the company further increased the hedging target ranges for the periods 25 to 60 months by an additional 5% to decrease gas price exposure and smooth the transition from one hedging period to another as the outer periods move closer to prompt. The company also engages in physical hedging by contracting for optional physical natural gas supply through monthly calls and daily optimization of its physical gas storage to reduce exposure to the Transco Zone 5 monthly and daily prices. The company has also increased its percentage of baseload first-of-the-month fixed-price gas purchased to supply its combined cycle generation in order to mitigate the risk of daily gas price spikes. Witness Lander's testimony indicates that the company should utilize a physical fuel hedge by building additional utility-scale renewable energy facilities. The company does not believe the fuel rider proceeding is the proper forum in which to evaluate the importance of renewable energy resources to the grid, and such a discussion should instead be had in the future IRP proceedings. With respect to Witness Lander's recommendation that the company incorporate periodic gas price spikes into the forecasted fuel costs, the company has reviewed its forecasting process, including an evaluation of approaches similar to Witness Lander's recommendation, and determined such a change is unwarranted. Only with the benefit of hindsight could inputs such as actual weather events, prices, and system cost impacts be known. Additionally, the forward natural gas market curves that are incorporated into the company's fuel forecasts are reflective of supply and demand dynamics and trends. In the company's view, incorporating historical high market price events and other speculative forecasting assumptions into the current forecasting process could arbitrarily increase forecasted costs billed to customers with an unwanted consequence of more consistent over-recoveries over the long term. Additionally, beginning in 2020, the company has incorporated the outputs of its fleet analytics stochastic model into the fuel planning, procurement, and hedging process. The stochastic production cost model uses historical weather information to simulate numerous iterations or scenarios of future weather and load. This gives the company not only expected fuel burns, but also the probability associated with various ranges of fuel burns. The company continues to review additional opportunities to expand the use of stochastic production cost modeling and related outputs into its overall forecasting process to better calculate the range of costs that could occur throughout the forward period. With respect to Witness Lander's recommendation that the company be required to file month-by-month forecasts for the review period in future fuel cases, I would note that DEP already provides quarterly forecasts, including DEP's forecast of prices for uranium, natural gas, coal, oil, and other fuel required for generation of electricity as outlined in the stipulation agreement to in-depth fuel proceeding last year. Implementing a monthly forecast requirement would not provide any additional measurable insights into the company's under or over recovery or serve any relevant purpose in reviewing the company's actual fuel costs or its estimated rates for the billing period. This concludes my testimony summary.
Thank you. Madam Vice Chair, Mr. Phipps and Mr. McClay are now available to answer any questions of council or the commission.
Thank you, Ms. Brown. Nucor? Say CCL?
No questions.
Thank you. ORS?
No questions.
Commissioners? Commissioner Caston?
Good afternoon now.
Good afternoon.
Mr. Phipps, this was, I think, mostly in your testimony, but Mr. McClay can answer also, whomever. The purpose of the production model, and I'm quoting some of this, is to minimize the production cost needed to serve the projected customer demand, correct?
That is correct.
In this model, with the inputs, produces an optimized hourly unit commitment plan for 7-day forecast period.
That is correct.
And those inputs let's say forecasted energy demand, forecasted fuel prices, variable transportation rates, planned maintenance, refueling outages, generating unit performance parameters, reliability constraints, and then you say included but not limited to. Those are pretty much the inputs, correct?
Those are the majority of the inputs. That's correct.
And if it's still true that garbage in, garbage out, the level of confidence Duke has in these inputs is what?
Well, I wouldn't classify it as garbage in and garbage out, sir, but I would say I have a high confidence about the inputs of the variable inputs into the model and the output to stack generation to ensure the lowest cost operations are generating for the customer.
And I probably should have used other terminology because I did not mean to imply that y'all put garbage in the model.
Yes, sir.
I just heard that in college till I was sick of it.
Yes, sir.
And apparently I put a lot of garbage in my models.
I have too, sir.
Unintentionally, though. Page 6, lines 22 through 23 in your testimony, relative to coal trends. Let me find that. Increased demand in global markets for both steam and metallurgical coal. So does this mean that coal demand use is increasing on a global scale?
Yes, sir.
So it's not decreasing?
No, sir.
So where we may be decreasing or may not be decreasing, the rest of the world's not?
We're seeing both an increase, both domestically
Right.
and internationally, which is global.
Okay. And I've got to be honest with you, the steam and the metallurgical coal, can you kind of describe the distinction?
Sure. First, I'll start with the metallurgical coal. It's a higher grade quality. It's a high BTU, low ash product. To give you just a quick sense, it is in two classifications. It's called a high vol and a low vol. Volatility in the coal is the gaseous state that burns off initially. The rest is carbon. And when that expands, they call it the coke button. So you put this metallurgical coal in a battery, as they call it. Once that gaseous state comes off, it expands. If you don't get it right, the right product, it'll actually damage the battery. That coking product comes out and is mixed with pig iron to create steel. So that's a higher quality product. Thermal coal, you can use metallurgical in the steam thermal area, but you can't use the thermal product in metallurgical. So steam thermal is used in the production generation of electricity at a utility level, and it's still a good product. Don't get me wrong. It meets the requirements of a specific utility. So
Generally speaking, would I guess the steam coal be less expensive than
well, I will say that's a matter of state of the market and time, but currently you are correct. It is cheaper.
page 8, lines 1 through 8? As I read this,
I'm sorry, Your Honor. What page? I'm sorry.
page 8,
Page 8. Sorry.
that's all right. You say, while there continues to be adequate natural gas production capacity, there's a growing need for natural gas pipeline infrastructure to serve increased market demand. Conversely, pipeline infrastructure permitting and regulatory process approval efforts are increasingly challenged and taking longer due to increased reviews, intervention, which can delay and change planned pipeline construction commissioning timing. So is that telling me that there's adequate supply of gas and production of
There
gas?
is adequate amount of gas reserves to be drilled and produced. The current production levels tend to match what that demand is, but they can increase drilling to increase production if there is additional infrastructure for that gas, for instance, in the Marcellus, to be drilled and shipped via new pipelines.
So, my simple analogy, because the way I think, I need 10 million gallons a day of water. I have a safe yield supply of 100 million, but my infrastructure, transmission, distribution only provides 8 million. Is that kind of what you're saying? You have the supply, but to extract the supply, it's the infrastructure that's preventing that?
In my viewpoint today, that is correct.
And you say due to increased reviews and interventions. Why? Where's that? Who?
Well, just that there's additional reviews and scrutiny from a regulatory perspective, and anyone that has a intervening position in those reviews, and it just requires additional reviews, and in many cases, to go back and re-permit and follow through.
Because this is kind of the second time I've heard this. I think I heard something very similar from Dominion Energy. So this is in your opinion, a chronic or a real issue relative to gas supply.
It is my opinion, yes, it is a concern.
Anything you can elaborate on, Mr. McClay?
No, I totally agree with Brett's position. You know, there is different areas of the country that can ramp up gas supply, especially down in East Texas, but that doesn't help us here in North Carolina. Doesn't help in South Carolina. Sorry. Basically, it's more the increase in production down there will probably go to LNG and go overseas.
So what is the solution to the problem?
Wish I knew, but I would say part also what's going on is some of the production, you know, there might be a little bit of incremental production that can be had. And I think a lot of the producers are holding back and focusing on their balance sheets and trying to return dividends to shareholders and enjoying the price rise a little bit. That's, you know, from the research that I read. So in other words, you don't have to sell as much, but you get twice the price. That's also occurring.
So what I'm hearing is that there is an infrastructure issue that's being caused by external forces that won't allow the gas produced to be shipped to where it needs to be, and those that produce it and sell it, you did not say profiteering, but maybe are holding back a tad because they can make a greater return selling less gas.
And save their reserves. Yeah, that's part of it. Yeah. Yes. Yes.
If you were eminent supreme archon and could change anything, what would you change?
I'd probably wave my wand and put more put more pipeline infrastructure from the north, meaning Appalachia gas, you know, Marcellus gas, and connect it to, you know, to the south where a lot of the generation needs that gas. There's a lot of demand, and I think that's so. If I could do that, yes, I think that would encourage producers to produce. You know, right now, in the past, I should say, normally a price rise encourages more production, right? I mean, that's supply demand, but that's not happening. You know, due to infrastructure as well as just, you know, also, you know, I've read other things that getting a gas, you know, getting rigs online, getting infrastructure to drill. There's labor issues, just like Brett mentioned, and, you know, getting, you know, frac trucks, labor for frac trucks and for various other, you know, whatever they do to bring it out of the ground. It's just not as easy anymore. They're having issues also, you know, with labor. So there's just, I think, a confluence of different things that are happening right now that are just holding production steady. The last 14 days, production's been steady. I'd say the last, you know, let's go back to January, the production is pretty steady. I mean, within a BCF a day. It hasn't moved, and we've seen prices almost, you know, double or triple, right? We're at $9 and 30 cents today in the prompt month. Back in January, we're at, let's call it $3. So it's been a big move, and not much response from production.
If there were transmission lines from up north, as you said, wave your magic wand and could put them in, and they could be in the ground in 2 years or next week. Do you think that would relieve any of that pressure, that price volatility?
That's probably out of my wheelhouse, but inherently, if you can transport power, that would be. But I would imagine putting power lines in, building those, you might have some difficulty as well. Some of the same things that pipelines run into.
And the difficulty being?
You would have,
Increased
you'd have to
reviews, regulatory interventions.
obviously, yeah, you'd have a lot of probably roadblocks in front of you. So that's my guess. Challenges.
One final thing, Mr. McClay. Mr. Lander's surrebuttal, actually when he talks about the purpose of his surrebuttal testimony, says the purpose of my surrebuttal is to respond very briefly to 2 new issues presented in the rebuttal testimony submitted by Duke Energy Progress witness James J. McClay III. What were those? Can you tell me what those 2 new issues were? Do you know what 2 issues he's talking about? I mean, he says it here. But
2 new issues. He wanted to create another report. I know that with a price adjustment. Although I don't know if that's necessarily new. He wanted to, use a physical hedge, use renewables as a physical hedge, and we said that it wasn't necessarily the right place to do that. We have an integrated resource group that does that, and I can't really opine on that.
Well, I guess what I'm asking, I'll just read what he says. Specifically, my testimony will, 1, explain why it is appropriate to address the company's resource mix in these annual fuel rider proceedings. Did you introduce something new relative to that?
I think all I said was it was not appropriate to talk about, and I think he kind of rebutted and said it is.
Is that a set rebuttal or just a disagreement?
That could be just an opinion.
Number 2, provide some clarification regarding my forecast recommendations that witness McClay seems to have misunderstood.
Yeah, I don't think I misunderstood it. Looks like, creating some extra reports with some volatility in price that he felt needed to be in the forecast and look back on. And, our opinion is in the forecast that we have, it already incorporates volatility and gas price volatility and location prices for natural gas, oil. It's all updated, and the market has all that information in it, so no need to compound it. So that was my thoughts.
Well, I guess what I'm trying to understand, and I'm not sure I'm hearing it, and it's okay, is that did you introduce, I looked through this, did you introduce
No.
Some new?
No, I didn't.
Okay, no further questions, thank you.
Thank you, Commissioner Cassidy. Commissioners, any other questions? Commissioner Powers?
Thank you. And either one of you gentlemen can address this. We hear, Mr. McClay, I've read where record profits for oil companies in the last quarter and that sort of thing. And we're in the middle of all this infrastructure money, sounds like being available in some way or another. Would the Government Infrastructure Act, is there any of it the way that could be used toward this pipeline or or is it available toward the pipeline, or is it just so much litigation, things are bogged down, or I just don't understand about the pipeline.
I don't understand. I don't know the answer to that. I really don't. So you're saying, could the government intervene under a certain act and compel the courts to just, have the infrastructure built?
No, I'm talking about is there money available through the infrastructure bill that if
I do not know that.
And I don't know that direct answer. I'm sure if there are, that it's being utilized, but that doesn't alleviate some of the regulated pressure regardless if you're throwing money at it, that it would still go under certain reviews regardless.
are most of the objections environmental, or what are the actual objections to going forward with it?
Usually environmental.
Okay. And I think following up on Commissioner Caston, I think what he and I think I also had the same question, if it's a rebuttal, is it more than just, I don't agree? And I think you said you don't see anything new you brought out that would need a response.
Yes.
Okay. I mean, we know everybody doesn't agree or we wouldn't be here today. Thank you very much.
Thank you, Commissioner Powers. Commissioners, any other questions?
Madam Chair,
Commissioner Williams?
thank you. Good afternoon, gentlemen. Mr. Phipps, I'm curious from your testimony if in the future the Southeast Energy Exchange might make a difference with some of the challenges that you have documented over the past year.
Well, the acronym SEAM is certainly out of the scope of my roles and responsibilities. But with that said, it is the expectation that it would assist overall, yes.
And I appreciate that. I could also imagine that the challenges might be universally felt within the SEAM territory.
That is correct. The drivers that we face challenges here at Duke Energy, all the utilities in the Southeast are facing some of the similar things, and if not the same things.
Thank you. Mr. McClay, based on your testimony, I wondered if you have any input on other states that do utilize physical hedging beyond the North Carolina experience that is in the testimony. And maybe more specifically, are there other Duke territories that do take advantage of, that are utilizing physical hedging, particularly using renewable energy? And if you'd like to expand on what that experience is like.
I honestly don't know if, I don't have the experience to know what other states are doing. I know in our own territories in Florida, we do have solar, more renewables going in down there. And in the Midwest, there's some renewables, but it's not really, I don't think it's fleshed out to call it physical hedging right now. Wouldn't call it that.
I think that'll be an interesting topic in the future then.
Right.
And do you want to elaborate any on the idea that the best place to explore this is within the IRP?
So I guess you could just say that, the generation mix that is set right now produces fuel exposure, and that's what I hedge. To opine on the future generation mix and where it goes and how much is not for me to say. That's, there's other discussions going on.
So you're operating from the realm of what was defined in the most recent IRP.
Yeah, and I use a 5-year forecast, to do our hedging rolling 60 months. So once if something goes in, gets approved and is actually in the forecast, then I'm the person, my group will do the hedging for it. And that's how it works.
Thank you. I appreciate both of your comments.
Thank you, Commissioner Williams. Mr. McClay, I have a couple of questions, please. On page 7 of your testimony, you end in end of line 12 and onto 13, transition from one hedging period to another as outer periods move closer to prompt.
Yes.
And in response to a question, you used the term prompt month. Can you?
Sure.
I'm not a hedging expert.
No, that's fine.
So if you can.
It might have been a little
Hell.
confusing word. So the month in front of us is considered the prompt month. And as we roll through time, through 60 months, 1 month will roll off and 1 month rolls on towards prompt. So that's how we have a shift of a rolling 60-month period. And we hedge, for 12 months at a time period. So we have a higher hedge percentage in the front 12, and then it decreases as you go further back. So as everything rolls, we say it's rolling towards the prompt. It's just a term.
And that's basically the next month.
Right, which is the month, one will, roll off and one will roll
Okay.
on, and then you get a new 12 months, and then you have to adjust your hedge.
And you've presented testimony that 2 years ago or a year and a half ago, I think you indicated that the company extended the hedging program from 36 to 60 months.
That's correct.
And has that helped mitigate some of these volatile prices that we've seen in the last few months?
Yeah, so if you go back 2 years, approximately, and when we extended the hedging program, we had a lower percent. First of all, we only went out 36 months, which is a rolling 3 years. So we went to a rolling 5. So you got to participate in the shape of the natural gas curve. Prices in the future were probably around $2.75 for 10 years. They're very, what we call flat curve. In other words, it wasn't much of a difference with today's price or 10 years from now, the price. Their average was the same. So we recognized that we were going to be burning more gas. And it made sense, given all-time low prices and, coming out of COVID and et cetera, that it would just made a natural sense that to go an extra, 2 years would benefit the customer because prices can't go much lower, right? I mean, in the end, well, that was in hindsight. If we look back, it seemed like a no regrets good thing to do for the customer, so we did.
So basically what y'all did with that hedging program is you've hedged further out.
Hedge
and
further
locked
out.
in those lower prices
Yes,
for a certain percentage of.
that's right. So we, as the hedging program works, we layer in. So we don't buy everything at once. We don't speculate. We just, over time, meet our hedging percentages, in our 12-month periods. And, for out that far, it's about 15% is our target. And at the time, I think it was 10%, and we raised it last year to 15%.
And that's 15% of y'all's
Of a forecasted,
burn.
of our forecasted, burn. So, and that can change, right? Our burns change a lot with coal moving around and different things happening on the system. But yeah, that's the target hedge.
Okay. Also, on pages 9 and 10 of your rebuttal, in response to your discussion of witness Lander's recommendation of incorporating gas price spikes into forecasted fuel cost, with item number 3, you stated, I'm on line 15, weather trends over a season or short-term extreme weather events and their corresponding impacts to the balance of supply and demand are not known and cannot be fully predicted nor forecasted without introducing significant speculation into the forecasting process. But then there seems to be, over on page 10, some sort of at least historical weather events or some sort of weather information that is there weather information in that FAST model that is being used?
Yeah, it's several scenarios where weather scenarios are in that model. So by adding to that, you'd be doubling down on price spikes, and it's already in that model, and it gives probabilistic outcomes of your burns for the month, and for going out 6 years basically. So I guess adding more on top of that, more volatility, just doesn't make sense because it's a sophisticated model that already has that within it. It stresses load, and it stresses weather as well.
Okay. And with regard to, in response to Commissioner Caston's questions, you mentioned the extra report or forecast that
Right.
Witness Lander may be suggesting. DEP is already providing forecast to interested parties. Is that not correct?
That's correct.
But that's on a quarterly basis, not a monthly basis. Is that correct?
That's correct.
Okay. Thank you very much. Commissioners, any further questions?
One
Commissioner
follow-up.
Caston.
Relative to actually what Chair Belser was talking about too, and this is probably for you, Mr. Phipps, but anyone. I read where your production cost model is a stochastic model. And as I understand it, that's really just a probability model, correct? Which is, I think, what you were just talking about.
That is correct.
So, with the probability, and I've heard Monte Carlo analysis mentioned multiple times through the course of many of these different hearings, but is the company working toward, in these runs, a probability factor, say, of 2% or 1% or 3%? What's the probability factor?
So stochastics looks at all the different opportunities. Let's just for example, 100 runs. So we have what we look at as a mean, the average. It's the 50%. So there's 50% chance something greater than or 50% less than that average is going to occur. For gas, they look at a probability of 90%, probability of 10%. For coal, we look at a probability of 75% and a probability of 25% to get a range to where we can, for coal, we typically procure towards the mean and look for flexibility in contracts or spot market opportunities to react to those probabilities of greater than or less than that average. I don't know if you have any.
Right. And natural gas, sort of the same, where we'll target the mean in our hedging, although we'll put in, we'll give ourselves enough flexibility to get flexibility in our physical purchases so that we can get up to the 90th percentile if we need to. So that's what we use.
Okay, that makes sense. And I guess in your response to Chair Belser's question on the weather, that clicked. Okay.
Okay.
Good. Thank you. I appreciate it very much.
Commissioner Thomas.
Thank you. So you mentioned the changes to the hedging program in terms of extending the time frame from 36 to 60 months, and then the amount that's hedged, I think, from 10% to 15%. So is that correct? Is that what you said?
Yes.
Okay. So basically, while prices have been going up, then that has produced benefits for customers. But hoping or assuming, either whichever way you want to put that, that natural gas prices at some point may tend to come back down, then that would expose customers to higher prices versus the way you did it before. Is that correct?
It could.
Okay. So on a different topic, the hedging, physical hedging using solar, some aspects of that I just have a hard time getting my head around. And one part of that is that obviously solar is not available all the time, and certainly may not be available during peak demand periods. So is there any way you can help me to understand how solar physical hedge fits into peak demand? I just don't understand.
I think solar is very important, and it basically, from a high level, yes, it does have some value, because if you put enough on the system, but there's limits. Because like you just said, in the wintertime, it probably has a lesser availability factor, or we should say it doesn't produce as much when you need it. But in the summertime, it does. So there's value there. But, I think you hit it right. It's not one for one. It's, you're trading probably dispatchability for intermittency, probably a good way to say it. So it has some value for sure, but I'm just, it's probably not one for one.
Okay. Thank you. I appreciate that. That's all I have.
Thank you, Commissioners. Ms. Brown, any redirect?
No redirect.
Okay. Gentlemen, thank you for your testimony this afternoon. You may stand down.
Thank you for having us. Thank you.
Commissioner Belzer, we would request that these two witnesses be excused as well.
Same admonition.
Thank you.
Ms. Clancy or Ms. Mixon? I'm sorry. Let me get... Nucor has no witnesses, correct? Okay. Thank you. Ms. Clancy or Ms. Mixon?
Great. Thank you, Vice Chair Belzer. The South Carolina Coastal Conservation League and Southern Alliance for Clean Energy call Gregory M. Lander to the stand.
Okay, Mr. Lander's via WebEx, is that correct? Good afternoon, Mr. Lander.
Good afternoon.
Mr. Lander, I'm going to ask you to state your name, please.
My name is Gregory, pardon me. My name is Gregory M. Lander.
And Mr. Lander, if you'd raise your right hand and let me give you an oath here. Do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you very much. Ms. Mixon, you may proceed.
Thank you. Mr. Lander, can you please state your name again for the record?
My name is Gregory M. Lander.
And by whom are you employed and in what capacity?
I'm employed by Skipping Stone, LLC. I'm the president and the head of our energy logistics consulting practice.
Thank you, Mr. Lander.
With a focus on natural gas.
Thank you. Vice Chair Belzer, we would like to qualify Mr. Lander as an expert witness in natural gas pricing and commodity markets, including forward markets, and interstate pipeline transportation and capacity issues. Counsel for Duke Energy Progress, the Office of Regulatory Staff, and Nucor Steel have all indicated that they are willing to stipulate to Mr. Lander being qualified in those fields.
Is that correct? Everyone stipulates to Mr. Lander's qualifications as an expert? Hearing no objection, would you restate that again? I couldn't write that fast, Ms. Mixon.
Sure, it's natural gas pricing and commodity markets, including forward markets, and interstate pipeline transportation and capacity issues.
Okay. Mr. Lander is qualified as an expert in those areas enumerated by council. Thank you.
Thank you. Mr. Lander, did you cause to be pre-filed in this docket on May 18th, 2022, a public version of direct testimony consisting of 22 pages?
I did.
And Mr. Lander, did you also cause to be prepared a confidential version of your direct testimony that was filed under seal with the commission?
I did.
Do you have any changes or corrections to your pre-filed direct testimony at this time?
I have no changes to either version.
And Mr. Lander, if the questions put to you in your testimony were asked of you at the hearing today, would your answers be the same?
Yes.
Thank you. Vice Chair Belser, I would move to have the public version of Mr. Lander's pre-filed direct testimony entered into the record as if given orally from the stand. And would further move that the confidential version of his direct testimony remain under seal.
The public version of Mr. Lander's pre-filed direct testimony will be entered into the record as if given orally from the stand. We will accept the confidential version of Mr. Lander's pre-filed direct testimony for our use and will maintain that under seal.
Thank you, Vice Chair Belser. And we did identify the pagination error in the confidential version and can file or refile a version under seal that just makes the.
If there's no objection from the parties, I think that would be a good thing to just make sure that the pages of both versions match, with the exception of just redactions.
Yep.
Okay, thank you.
Thank you.
We do not need to hold a late file exhibit, but would ask that you do that at your earliest convenience following the hearing.
Yes, thank you. Mr. Lander, did you also attach to your direct testimony 3 non-confidential exhibits identified as exhibits GML-1 through GML-3?
Yes.
And were the exhibits to your direct testimony prepared by you or under your direction?
Yes.
Thank you. I would also move to have exhibits GML-1 through GML-3 as attached to Mr. Lander's pre-filed direct testimony entered into the record as the next composite hearing exhibit.
Mr. Lander's pre-filed direct exhibits GML1 through GML3 will be marked as a composite exhibit with the hearing exhibit number identified as hearing exhibit 9 and entered into and received in the record of this case.
Thank you. Mr. Lander, turning to your surrebuttal testimony, did you also cause to be pre-filed in this docket on June 1st, 2022, surrebuttal testimony consisting of 6 pages?
I did.
And do you have any changes or corrections to your pre-filed surrebuttal testimony at this time?
I do not.
So if the questions put to you in your surrebuttal testimony were asked of you at the hearing today, would your answers be the same?
Yes.
Chair Belser, I would move to have Mr. Lander's pre-filed surrebuttal testimony entered into the record as if given orally from the stand.
Mr. Lander's surrebuttal testimony will be entered into the record as if provided from the stand.
Thank you. Mr. Lander, have you prepared a summary of your direct and surrebuttal testimony for the commission?
Yes.
Will you please share your summary with the commission at this time?
I will. Good afternoon, Chair Williams and members of the commission. My name is Gregory M. Lander. I am president of Skipping Stone LLC, Skipping Stone. As president, I lead Skipping Stone's energy, logistics, and energy contracting practice line. In this role and throughout my 40 years of experience in the energy industry, I have specialized, pardon me, for 38 of those years in interstate pipeline capacity issues, gas and capacity pricing, asset acquisition due diligence, market studies, and planning. My expertise encompasses a deep understanding of natural gas commodity market fundamentals, pricing, and related forward markets. The purpose of my testimony in this proceeding is to highlight how Duke Energy Progress's reliance on fossil fuel generation, specifically gas-fired generation, exposes ratepayers to significant price risk. It is in these annual fuel proceedings when the Commission reviews pass-throughs of fuel costs to customers, where we see how the company's current resource mix directly impacts customers' bills. As is evident from DEP's, Duke Energy Progress's, requested fuel charge adjustment, about $10 for a standard residential customer, recent high and increasingly volatile gas prices are heavily impacting DEP ratepayers' electricity costs. There are a number of reasons for these price increases. Fossil fuel prices, especially gas prices, are inherently volatile and are subject to domestic and increasingly international supply and demand factors. One of the biggest drivers in the recent uptick is increased demand for U.S. exports of liquefied natural gas. The U.S. is one of the largest and projected to become the world's largest exporter of liquefied natural gas. At present, existing LNG facilities are producing at and above nameplate capacity, which has in turn led to price increases. In addition, pent-up commercial and industrial demand has driven price increases as the U.S. and other countries' economies recover from the COVID-19 pandemic. Domestically, demand is also a key driver and heavily weather dependent. Unfortunately, ratepayers can expect these price increases to persist for the foreseeable future. There are a number of reasons for this, but I'll highlight just a few. First, Europe seeks to sharply reduce its Russian gas imports, which will likely mean increased demand on U.S. liquefied natural gas exports and construction of additional U.S. export facilities to ensure the increased flow of these exports. Second, Marcellus Utica producers in southwestern Pennsylvania have been reluctant to increase production beyond the amount necessary to keep their pipeline capacity contracts full. In an effort, and the reason they've done this, in an effort to avoid depressing market prices. Third, gas producers are using their profits from their gas sales to reduce their debts, pay shareholder dividends, or buy back stock. Duke, like many other utilities, use financial hedging over the review period to help reduce volatility and to stabilize prices for a portion of their fuel supply. That effort appears to have delivered savings to ratepayers, largely due to sustained commodity price increases in the review period when compared to the prices the sellers of those hedged products forecasted. However, for the majority of gas supply that was purchased at market price, ratepayers will still, through a significant rider increase, now have to pay higher energy prices for electricity to recoup not only under recoveries, but also higher forecasted prices in the future. The proposed rider increase thus underscores the limits of financial hedging, which can only stabilize future prices or reduce, but not eliminate price volatility. It is also important to understand that a utility cannot economically hedge future prices at prices below market forecasts, meaning that financial hedging cannot insulate ratepayers from the increased cost burden of steadily increasing gas prices. In contrast, through a physical hedging approach, a utility can procure fuel-free renewable energy, which more effectively mitigates its customers' exposure to fossil fuel price volatility and, according to EIA data, can deliver lower energy prices than the NYMEX, that's the New York Mercantile Exchange's, current gas prices that you see on the screen. Wind energy and solar energy have no fuel price, and once wind turbine and solar panel investments have been made, the only variable costs are operations and maintenance costs, which can be fixed by contract. Conversely, investments in new gas-fired generation are subject to variable and increasingly volatile energy costs in the form of fuel, and instead expose ratepayers to the risks of fuel costs affected by market vagaries outside of the utility's control. Thus, in addition to providing energy and capacity value, renewables can benefit the system by reducing the amount of fuel the utility otherwise would need to purchase, and in turn reducing ratepayer exposure to fossil fuel volatility. For this reason, I recommend that the company obtain the fullest value possible from wind and solar energy to hedge against fossil fuel price volatility and insulate ratepayers from future significant rider increases, such as the one we are seeing in this proceeding. I also recommend that Duke provide an additional, purely informational forecast in its annual fuel proceedings, which would essentially show the Commission what would happen if we experienced big price spikes in fossil fuels like we have in the past. This additional forecast would also be a useful tool in the next year's proceeding, when the Commission compares actual prices with both the utility's primary forecast and the additional forecast, and the Commission evaluates how and whether the company's volatility mitigation strategies, such as financial and physical hedging, are effective. My rebuttal testimony merely reiterates that this forecast recommendation is not for the company to substantially change its approach to forecasting, but rather to provide the Commission with additional information about the risks to customers of fuel price spikes. My rebuttal also emphasizes that annual fuel cost recovery proceedings serve as a natural forum to entertain resource planning discussions and considerations. These proceedings are where the rubber meets the road, and the Commission can see the direct customer impacts from the utility's past resource decisions to better understand future potential risks. That concludes my summary, and thank you for your time today.
Thank you, Mr. Lander. And Vice Chair Belster, Mr. Lander is now available for questions from the parties and the Commission.
Thank you, Ms. Mixon. Nicor Steele?
No question, Madam Chair.
Officer Regulatory Staff?
No questions.
Duke Progress?
No questions.
Commissioners? Commissioner Caston?
Good afternoon, Mr. Lander.
Good afternoon, sir.
If you don't mind, similar to what I asked Mr. McClay, when you state the purpose of your rebuttal testimony, to briefly, respond very briefly to two new issues presented in the rebuttal testimony submitted by Mr. McClay. Could you walk me through those two new issues that were introduced by Mr. McClay?
I'll start with the latter. The latter was what I perceived as a misperception of my recommendation with respect to an additional forecast. As I read his rebuttal testimony, it read that he was seeing that I was recommending that it be incorporated to the base forecast, to the one that would be effective for the billing period. That's not what I was saying. What I was saying was it should be additional. So it seemed to me that that was new because it appeared as a misunderstanding of my recommendation. Let me look and see what my,
Well, while you're looking for that, so if someone misunderstands someone else's testimony or don't agree with it, you classify that as new information?
I guess we felt it was important for the commission to understand that distinction.
Okay. And it took a lot of pages to do that. What was the other new issue?
I apologize for a moment. I have to look at an electronic version. I thought I printed out my photo. And I did not.
Take your time. It's okay. I'm not rushing you.
Oh, yes. The reason is I discussed the reason it's important to review these matters in a fuel proceeding is because the rebuttal of Mr. I believe it was McClay, and I apologize if I pronounced his name incorrectly, took the position that it was not appropriate to discuss physical hedging in this proceeding. We took issue with that because here is where the rubber meets the road in terms of the prices that customers pay and the impact of former decisions with respect to generation mix. And so to us, here's where the money is passed through to customers and the decisions made in the past affect those dollars. And the more fossil fuel generation there is, the more susceptible customers are to the vagaries of the market. And understanding the impact of those vagaries and the impact on customers, this is where that decision gets made. This is where those issues are discussed.
Well, it seems like an argument could be made that that's just simply a disagreement. You don't agree with what he said. I'm not sure I would say that that's a new issue, but
sorry, Commissioner Caston, if I may, I guess the question of whether those are new issues is somewhat a legal one, and we saw these as new issues because first the company raised this argument related to resource planning and whether discussing resource planning decisions in this proceeding was appropriate or not for the first time on rebuttal. And so we saw that as a new issue. And second, as to the clarification of Mr. Lander's forecasting requirement, again, because there seemed to be a very kind of fundamental misunderstanding of what he was recommending. That was, again, the first time that we understood the company had that position or took that, had that interpretation was, again, in rebuttal. That was the first time that we were able to see that, and so felt that it was appropriate to, again, very briefly respond on surrebuttal to ensure that the record was correct.
Okay, and understand I'm not trying to make this more difficult on anyone, the company, interveners, anyone. But I know in prior discussions we've had on surrebuttal is that it might be helpful going forward to kind of clarify all those issues, why it's new, because kind of looking back on some of this, it seems to me that everyone wants the last word. And I appreciate that. But that's all I've got to say about that. Thank you. Mr. Lander, relative to 5827-865F, I think you say, does South Carolina law prevent, in the answer to the question, does South Carolina law prevent consideration of the company's resource generation mix in annual fuel? Do you recall that?
Could you refer, pardon me, could you refer to the page?
Page, yes, I wrote on it, so I've got to see, what is that page? I think it's page 3.
Thank you.
You say, note to the contrary, South Carolina Code Annotation Section 5827-865S requires that. So are you saying, based on your review of that section, that the law doesn't prevent consideration of companies' resource generation mix in annual fuel proceedings?
Pardon me, we're referring to the rebuttal testimony, sir? Sir, rebuttal testimony?
Surrebuttal, I'm sorry, surrebuttal, page 3.
Very good, thank you. Would you mind, I apologize, would you mind?
Yes, sir. Relative to the question on line 12 through 13, and your answer on 15 through 24.
Yeah.
And I'm trying to think, let me think how to phrase this. Did you read the whole section 5827-865, like A1, B, C?
Negative.
I'm sorry?
That I did not.
Okay, you just only read 5827-865F.
That is correct.
Okay. Well, that kind of answers that question. And I'm not, trying to be clever here, but if the utility opted to turn the power off, the generation source off, I guess if I wanted to carry this theory a little further, that the law doesn't prevent consideration of that, I guess you could consider that as a fuel hedge too. Could you not?
I believe the obligation to serve supersedes the obligation to hedge, because you only hedge, not only hedge, but you hedge because of the obligation to serve and the fuel costs associated with generation. I'm not sure in your question, the premise of shutting generation off, how that relates to.
I understand, and that is their obligation. It was a theoretical question. I should have posed it that way. I apologize. In questions and responses from Mr. Phipps and Mr. McClay, amongst some of their responses, they assert that infrastructure issues, such as natural gas transmission lines coming from north or distribution lines, transmission lines throughout the state, are significant issues. Do you concur with that?
Well, from a fuel cost perspective, the basic driver of fuel cost is the general market conditions with respect to supply and demand. So if you had more pipeline capacity, you'd have the ability to buy more gas at the higher prices. I believe is a fair answer to the infrastructure question. The benefit that South Carolina has vis-a-vis its location on the pipeline grid is that additional supplies can come from the south and from the north. And supplies are not limited to the Marcellus in that regard. So gas can come from the Gulf Coast, from the offshore, and from, for instance, the Haynesville, which is, if you will, sort of in central northern Louisiana, and is tending to flow to the south. It is flowing to the south today because the prices of the export market are superior, and therefore that's where that gas tends to go. However, all gas in the market goes to the buyer wishing to pay the most or more than some other buyer. And so gas can come to South Carolina, but it comes at a premium because it has to compete with other demands.
Okay, I think I follow some of that. Relative to Mr. Phipps' testimony where he talks about reasons for, I guess, gas spikes or issues, a couple of those were regulatory and intervenor issues that affected, in essence, the construction in a timely way and a cost-effective way of infrastructure. Do you agree or disagree with that?
There are many contributing factors. That is certainly one.
And I think I mentioned, I've heard the other electric and gas utility in the state mention the need for additional lines heading to the coast. And I've also heard others say we need to stop all future gas lines, all transmission lines, period. You know, we don't need any or don't want any. So there's definitely a disagreement there. There are some that say we need no more, we want to stop all gas lines. And the utility saying, well, we need more gas lines. Who's right?
Well, I'm not familiar with the case you're citing to. I have not read the record, did not participate in that case. So I don't know what assumptions they were making or assertions they were making. I apologize.
Well, if the issue is supply and demand, and if you have the supply and you have the demand, and you can't get the supply to the demand, would that be an issue?
Well, then you have to look at, yes, you have to look at that, and you have to look at substitutes. And one of the issues that I've raised in my testimony is a physical hedge with renewables would act as a substitute and would reduce the demand for natural gas on a sort of on an annual or on a overall basis. That overall basis could also reduce demand for capacity need or undermine, if you will, the economic viability of building capacity against a possible dearth of demand.
So-
In the pipeline business, unlike the electric business, pipelines build because there's somebody, a shipper, willing to sign up for 20 years of capacity and take or pay prices for that capacity for 20 years. And so those economic entities have to see it's worthwhile and valuable to enter into such contracts. Many may see that the future introduction of renewables undermines the economic underpinnings that might go into a decision to subscribe to that capacity.
So if I'm hearing you correctly, you're making an argument that infrastructure needed is not going into place because the utilities see the value of solar replacing that need. Is that what you're saying?
Well, what I'm saying is it's not only utilities that are subscribing to capacity expansions. It takes all kinds, well, depending on the expansion, depending on the company, depending on the sponsors of projects, their shippers tend to be a very large mix. And so I'm speaking of those shippers who have their balance sheets on the line when they're making subscription decisions.
And you don't think there's an effort regulatory-wise or intervenor-wise to slow down, retard, or eliminate infrastructure going in place to relieve the gas supply stress? Is that what you're saying?
Pardon me, I thought you had finished. Did you finish your question? Sorry.
Yes.
That's very application specific and fact specific. So there's no general rule that can be applied across the board as to the factors that are affecting infrastructure going into place. It's very project and fact specific.
But it seems as though you're telling me, at least in this case, that the answer or solution would be using renewable as a hedge, but you don't know exactly the distribution concerns or issues or transmission issues here. So I'm struggling to understand how you can make that assertion but not know the other. Am I misunderstanding something?
The utility, when it does utility scale solar, sites it where it can work and supplements its T&D system as necessary. And so the physical hedge that I'm discussing in my testimony would be utility sponsored, utility owned, or purchased by the utility on a fuel-free fixed cost basis. And that those two attributes, fuel-free electricity, would act as a physical hedge to the extent possible. And those extent possible issues are distribution, transmission, hours of the day, wind speed, wind location, solar radiance throughout the seasons.
Okay. And while it really won't serve any purpose now, but just for your edification relative to that fuel cost, it might be worthwhile to look at that 5827, 865, A1, B, and C, not just F, because, it's literally fairly black and white, relative to what those costs would be. But, reasonable people can still differ on things. And you've been very patient, Mr. Lander. I appreciate it. Thank you for answering my questions.
Thank you, sir.
Thank you, Commissioner Caston. Commissioners, further questions? Commissioner Thomas.
Thank you. And thank you, Mr. Lander. I have a couple of questions. So I guess one of my concerns is risks associated with investing in these types of projects where your capital costs are high. I mean, you've got no fuel costs, but the capital costs are high. And then my other concern is with regards to trying to get transmission lines connected, let's just say offshore wind as an example. I'm hearing different things in connection with different projects and interveners coming in that are fighting transmission lines for electricity. It's not just natural gas, but it's other transmission lines. So, I mean, it didn't look to me like it doesn't really matter which way you're trying to go. Transmission can still be a problem, and getting the electricity to the markets. Are you seeing anything like that?
We had that issue. I'm familiar up in New England in particular with the same transmission issue. There was I'm going to use the term NIMBY because I think most people know what that is, not in my backyard. There was a NIMBY concern among people who had seacoast vacation homes, and they didn't want to see windmills, large wind turbines on the horizon. So in New England, they moved the zone, if you will, of the windmills further offshore. Then there was the transmission argument raised again to bring those power resources on shore, and that was solved in, I believe, in Massachusetts and possibly Rhode Island as well, with legislation. And I believe I've got that right. At least that's my memory. And so I think that I think I'm addressing the question, which was, am I familiar with that? And that was, I believe, the answer. If I didn't answer your question, I apologize. Please rephrase.
Okay, so I guess another concern I have too is that you're seeing situations where, in particular with wind and lawsuits with issues, killing birds and things of that nature. So I guess that puts customers at risks for those sorts of lawsuits and potential additional costs due to activities such as that. Is that something that you've given any consideration to?
I have no familiarity with lawsuits regarding bird deaths.
Okay. All right. Well, I thank you. That's all I have.
Commissioner Powers.
Thank you. Really just one thing. I'm looking at your testimony, and on page 22, you talk about using wind and solar energy to the fullest extent possible to hedge against fossil fuel price volatility. I'm sorry. Does that statement take into account that the solar or wind is not considered dispatchable at this time?
Yes. On page 19, I also use the word value. And so I'd refer you to page 19 because I think that's a fuller explanation of what I'm trying to say. Let me get the specific line references. Give me a moment. So it's lines 3 through 6 where I probably do a better job of explaining myself. So I'll read what I say there. In short, in addition to providing capacity, energy, and other services to the electric grid, renewables provide hedging value, and the Commission should encourage the company to obtain as much of that value as possible as part of the company's comprehensive hedging strategy. So when you incorporate value, which I do there, obviously, too much of anything can exceed value. So it's a combination of all of the factors that go into siting of renewables, their location, the type of renewable, the cost of T&D upgrades. But to the extent that value can be achieved on a long-term levelized cost of energy, meaning the cost of the energy of the fuel-free energy over time versus the projected costs of generation plus fuel over time, there's a value that can be obtained, and that's a subject of analysis and presentation by the company and interveners on those issues. And so value is the key driver, and obtaining that value is the key driver that we're talking about.
Well, certainly there's a value, but depending too much on that or on wind and solar, could that affect the reliability of the power to the customer?
Intermittency is an issue with renewables. And to an extent, you obviously need to have backup for nighttime when there's no sun, for periods of low to no wind. But the point of looking at it from a cost to the consumer point of view, when you're not burning fuel, you're not having a cost that has to be passed through. And if the levelized cost of the energy that you're obtaining and not having to buy fuel for generation is less than the projected cost of the fuel by itself, then that's a value that should be obtained.
Okay. Thank you very much. That's all I have.
Anything further, commissioners?
Can I have one follow-up?
Chair,
Commissioner Williams?
Sorry.
thank you. Good to meet you, and thank you for your testimony today. I'm going to take a slightly different tack than my colleagues and ask that you talk a little bit about, if you have knowledge about physical hedging in other states, from the Utility Commission requirement perspective. What I'm curious about is where that analysis starts. There's been some, you've referenced 5827.865F, but I want to understand if you can add to your testimony from other utilities or other states, where that typically starts.
I believe one of the factors that's caused this focus in this proceeding at this time is because we're coming out of a period of an extended period of maybe 8 years or more, maybe even 10 to 12 years of very low gas prices. And the effect on consumers was that a lot of the driver for the renewables was driven by legislative goals or other policy goals that states or companies had. What we're seeing now with this tremendous increase, this tripling, maybe even to some degree, well, let's say tripling, that's good enough, of gas prices, that you now say, well, and how long is that likely to continue? You look at the external factors, you say it's likely to continue for a good long time. Now you're looking at, well, how do I address that? Well, it turns now that maybe the economics of renewables is a driver and is a way to insulate ratepayers to a greater degree from prices. When prices were very low and depressed, it was policy goals that drove renewables. Now, we believe it can be economic goals. I mean, just simple economic, not simple, but can boil it down to simple economics that, renewables can provide you energy that you don't need fuel to generate. And therefore, that's a cost that can be avoided. And when you look at the EIA study, and what I compared in my testimony was the levelized cost of energy for fuel-free power is less than the simple energy cost, not taking into account, the building of the gas-fired generators, but just the energy cost. So if you're comparing an avoidable energy cost to a capital investment, and the capital investment gives you better return than buying fuel over the same period, it looks to us like economics should be taken into account and into consideration so that ratepayers can obtain that value. Did I answer your question?
You answered part of it.
Okay.
The rest of what I was asking, and I'll ask it in a slightly different way. The North Carolina statute or regulation has been entered in testimony. Is that a recent decision by the North Carolina Commission? Did that decision come about because of the economics and because of the increasing costs in fuel?
I may be a little bit unfamiliar with the drivers behind the decision, but I also believe it had to do with avoided costs and integrating avoided costs for, I guess, what is called here DERP power, distributed energy resource. I don't know what the P stands for, sorry. So we looked at one part of it and say, you're looking at it for distributed energy. You could also apply some of the same logic, not to avoided costs, but to avoiding costs. And that's the reason we looked at that and thought of that. I don't know how recent that was, but I know it was in the recent several years. And I don't know what the driver was for it, but I know it dealt mainly with avoided costs.
Okay.
And we're talking about avoiding costs.
Okay. And I opened the door for you to talk about other states. Do you want to take that door or not?
Let me address it directly. I think many states are seeing the dramatic increase in gas prices and going, what do we do? So in a way, you're kind of, at least for me, at the leading edge of that looming issue, because this is the first state where this issue has come up at the same time as these prices are so high and appear to be persistently high going into the future. To me, that's what made it an economic issue driven by prices for fossil fuels. But other states I know are going to be dealing with the same issues with higher prices. How they respond, I don't know.
Okay. Thank you, Mr. Lander. I appreciate it. No further questions from me.
Thank you.
Thank you, Commissioner Williams. Commissioner Caston?
Thank you, Madam Chair. And it's a totally different question, Mr. Lander, than I was going to follow up with. But
pardon me.
I don't want to, I'm not trying to paint you in a corner or put words in your mouth, but I'm really trying to figure what should the solar mix be? Should the electric utilities be working toward 100% renewables and do away with all gas, coal?
I don't believe over the next 10 to 20 years without a significant increase in long-term energy storage, that's going to be physically possible. What can be possible is the reduction of fuel costs by the introduction of economic solar. And to the extent the solar were to be greater than the demand during periods of the day or season, then it would need to have energy storage to not waste that excess. But unless there's long-term energy storage of days at least, there'll need to be backup with existing resources to maintain reliability.
So what should the mix be?
That's a complicated question, and it's going to depend on a myriad of factors: location, availability of land, availability of transmission and distribution assets, the availability and land for storage, the existing demand centers relative to the existing solar sites. All of those matter, and you can't, I don't believe, at least I'm not prepared to make a simple percentage goal without analyzing all those factors and having many parties, the utility and interveners, look at those plans and compare those plans and argue those plans out in a forum where everybody has a chance to look at the same data and make decisions on that data.
So that is the gist of an IRP, correct?
Yes, and then this proceeding would be where you look at what is the result of decisions that have been made in the past, and how is that impacting prices. And something that may be of interest is the additional forecast that we asked you to require or recommended that you have utility do was to identify price spikes and the impact those could have, and then compare the actual forecast that's used for the billing period and this additional forecast when you're going through the review period following the actual period. But this commission could also say, give us a third forecast. This is up to you, where what would be the forecast if you had additional, what would be the fuel forecast if you had additional solar by X percent? And tell us what the comparison would be. So you can have a high-end forecast, an average forecast, which is what the company does, and an additional forecast which says, what if we didn't have this much fossil generation? What would the results have been?
So you're saying it's an economic decision?
I'm not sure what the it is in your sense. Could you
Well,
tell me?
relative to, I mean, thought you said it's a matter of the, I guess, the cost, solar versus the price of gas, or it came down to economics, or did I misunderstand that?
It's not solely economics because you have to integrate all these assets together into the grid. But at the margin, if it appears that the levelized cost of energy from renewables can compete with the fossil fuel only cost of generating electricity, that's something that the ratepayers should be able to obtain that value.
Again, I'm sorry.
No, I was going to say, and one of these proceedings assess that value.
Okay, I don't want to chase this too much, but again, that seems to me like we're talking about an RRP, and that in essence is what the utility does. Look, different mixes, different ratios, different proportions, different scenarios, and then what is the most reliable and best cost.
So maybe I can help bridge the gap for you, or what I might see as a gap. I have testified in other jurisdictions that an IRP should basically form the basis of the baseline for the fuel cost proceeding. And so the IRP makes a projection over a period of time with a resource mix and a associated fuel recovery. Then in the fuel cases, you compare the forecast, which can be in both the IRP and the fuel case, the same forecast, and then compare your differences. So that links the two. Here, right now, what we're looking at is the impact of past decisions and those economics. And we're saying it would be a good thing to not only have an additional forecast for the looking at what would happen to what the additional forecast would show as to price spikes, but also encourage the utility to, in addition to its financial and physical commodity hedges, to engage in renewable physical hedges as a way to mitigate, moderate, and levelize consumer costs.
Okay. Well, I will encourage you to read that 5827, 865, A1, B, and C, because when I read that, I don't see that. But again, reasonable people can see different things. I appreciate it. No more questions, Madam Chair.
Thank you, Commissioner Caston. Commissioners, anything further? Thank you.
Madam Chair,
Commissioner Williams.
thank you. Mr. Lanford, I want to go back to your discussion about avoided and avoiding cost. Could you clarify what you mean about that? As I reflected on it, I thought I understood, but I wouldn't want to have to testify to it right now.
Well, I was trying to give take logic that was in an avoided cost proceeding where they came up with a cost for an otherwise fuel-free generation. So the cost that ratepayers bear for fuel-free generation, and saying, if we had a view to avoiding fuel cost, then you could say the physical hedge associated with renewables is a way of avoiding fuel cost. And so looking at the value that renewables bring, if they're utility scale and or owned by the utility and or purchased at a fixed price, then you have an avoiding strategy, avoiding fuel cost strategy. Is that helpful?
I'll certainly go back and listen to it again and try to absorb it a little bit better.
I apologize for if I wasn't clear or helpful.
It's probably my brain absorbing things at this point. Thank you very much.
You're welcome, ma'am.
No further questions.
Thank you, Commissioner Williams. Commissioners? Okay. Ms. Mixon,
I have just a couple of questions for redirect.
please proceed.
Thank you, Mr. Lander. You got some questions from Commissioner Caston about challenges to pipeline infrastructure projects. Do you believe that challenges to pipeline infrastructure projects is a major driver of higher gas prices today?
No.
Can building additional pipelines result in increased costs to customers?
Yes, especially when you look at the cost of the subscription to the capacity, because that becomes a fixed cost which goes through fuel adjustment clauses of the riders, as well as the energy that goes through that pipe. And the lower the load factor of the utilization, the higher the effective cost of that subscription is. So you have a high fixed cost because of low load factor that is then loaded onto an energy cost, i.e. the natural gas itself. So you can't look at just the commodity side, the commodity cost side, when you're making economic decisions about long-term infrastructure.
Thank you. You also got some questions about what specific amount of solar the Duke should have on its system. Have you evaluated the specifics of Duke's resource portfolio?
No, I have not.
And is your testimony intended to recommend any specific renewable investments for Duke's system?
No, I do not. No, it does not.
Is the intent of your testimony to discuss the general risks of fuel price volatility and the general benefits of renewables as a means of hedging against those risks?
Yes.
Okay. Thank you, Mr. Lander. Those are all of my questions.
Thank you, Ms. Mixon. Nucor? ORS?
No.
Duke Progress? Commissioners, limited? Thank you, Mr. Lander. We appreciate your testimony today. You may stand down.
And we would also request that Mr. Lander be excused.
Same admonition. If commissioners end up with questions at the end of the hearing and your witness isn't here, I'm just warning you. Anyway, Mr. Lander, thank you, and you are excused.
Thank you all. Thank you for your time and your questions.
Thank you. Let's take about a 15-minute break until I don't even know what time it is. Hold on. I can't read that one. It's 3:41, so let's say 3:55. And then next, no witness, ORS. Okay. Thank you. Welcome back to the Public Service Commission of South Carolina. We will continue in the afternoon session with the hearing on docket number 2022-1E, the annual review of base rates for fuel cost of Duke Energy Progress. Let's take a roll call of commissioners. Present in the hearing room, we have Commissioners Thomas, Commissioner Caston, Commissioner Powers, and Commissioner Belser, and with us via WebEx, we have Commissioner Williams. We are at the point in the hearing for ORS. Ms. Rainey?
Good afternoon, Madam Vice Chair Belzer and members of the commission. ORS calls witness Mr. Anthony Brazino and Ms. Gretchen Poole as its first panel.
Okay, the court reporter will swear in the witnesses, please.
Mr. Brazino, if you'd raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you. Ms. Poole, if you'll raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
Ms. Rainey, please go ahead.
Mr. Brazino, please state your full name for the record.
My name is Anthony D. Berzino.
And by whom are you employed and in what capacity?
I'm employed by the South Carolina Office of Regulatory Staff as an audit manager.
Are you the same Anthony D. Brazino who pre-filed 18 pages of direct testimony in this case?
Yes, I am.
Do you have any corrections, edits, or changes to that testimony?
No, I do not.
If I ask you the same questions posed in your pre-filed testimony today, would your answers be the same?
Yes, they would.
Madam Vice Chair Belzer, I move that Mr. Brazino's 18 pages of pre-filed direct testimony be entered into the record as if given orally from the stand.
Mr. Brazino's pre-filed direct testimony will be entered into the record as if given orally from the stand.
Mr. Brazino, did you also pre-file 9 exhibits marked as ADB 1 through ADB 9 in this case?
Yes, I did.
Do you have any changes, corrections, or edits to those exhibits?
No, I do not.
Vice Chair Belzer, I move that Mr. Brazino's pre-file exhibits ADB 1 through ADB 9 be entered into the record as the next hearing exhibit.
Mr. Brazino's pre-filed direct exhibits ADB 1 through ADB 9 will be a composite hearing exhibit. It will be identified as hearing exhibit number 10 and entered into the record of this case.
Mr. Brazino, did you prepare a summary of your direct testimony?
Yes, I did.
Would you please present your summary at this time?
Yes. Good afternoon, Vice Chair Belzer and fellow members of the Commission. The purpose of my direct testimony is to explain scope of ORS's examination of Duke Energy Progress's books and records as they pertain to the company's operation of the Fuel Adjustment Clause in the current filing and to present the results of ORS's examination. ORS examined and verified the monthly over and under recovery calculations and balances as recorded by the company for the 12-month review period that ended February 2022. My direct testimony also explains the 9 exhibits that I sponsored for this hearing detailing these calculations. Based on ORS's review, ORS agrees with the balances and the adjustments as put forth by the company for the 12-month review period that ended February 2022. This concludes my summary.
Ms. Poole, would you please state your full name for the record?
Yes, it's Gretchen C. Poole.
By whom are you employed and in what capacity?
I'm employed by the South Carolina Office of Regulatory Staff as a senior analyst.
Okay. Are you the same Gretchen C. Poole who pre-filed 8 pages of direct testimony in this case?
Yes.
Do you have any changes, edits, or corrections to that testimony at this time?
No, I don't.
If I ask you the same questions today as those posed in your direct testimony, would your answers be the same?
Yes, they would.
Vice Chair Belzer, I move that Ms. Poole's 8 pages of pre-filed direct testimony be entered into the record as if given orally from the stand.
Ms. Poole's pre-filed direct testimony will be entered into the record as if given from the stand.
Ms. Poole, did you also pre-file 1 exhibit to your direct testimony marked as amended exhibit GCP1 on May 24th, 2022?
Yes, I did.
Do you have any changes, corrections, or edits to this exhibit?
No, I do not.
Vice Chair Belzer, I move that Ms. Poole's amended exhibits GCP1 be entered into the record as the next hearing exhibit.
I need clarification. Was there a corrected or amended version filed? Because mine does not say amended. That's why I'm asking.
Yes, the exhibit GCP1 was, an exhibit was filed with her direct testimony on May 18th, 2022, but we found a typographical error and filed on May
All right.
24th, the amended.
So we need the amended exhibit GCP1 will be marked for identification as hearing exhibit number 11 and entered into the record of this case.
Ms. Poole, did you prepare a summary of your direct testimony?
Yes, I did.
Would you please present it at this time?
Sure. Good afternoon, Madam Vice Chair and other commission members. It's my pleasure to appear before you this afternoon. ORS found the company's actual and estimated avoided and incremental DERP costs in this proceeding to be reasonable and accurately calculated. Their calculations complied with Act 236 and with this commission's orders and directives in previous DERP-related proceedings. ORS recommends that the commission accept the company's proposed updates to the NEM tariffs. This concludes the summary of my direct testimony.
Thank you, Mr. Brazino and Ms. Poole. Please answer questions from the party and the commissioners.
Thank you, Ms. Rainey. Nucor Steel.
No question.
Say CCL.
No questions.
Duke Energy Progress.
No questions.
Commissioners, questions of these witnesses? Last chance.
Madam Chair,
Commissioner Williams.
always taking that last chance. Mr. Brazino and Ms. Poole, thank you for being here. Mr. Brazino, during your audit, did you have any issues or findings related to the company's joint dispatch agreement?
We didn't encounter any issues with our review for that particular component.
Thank you. And Ms. Poole, do you anticipate a need to increase the legislatively mandated annual cap for these customer classes as the undercovery continues to grow?
I don't know that is definitely necessary. It's something that would have to be explored further.
That makes sense. Thank you. Those are my questions. I appreciate it.
Thank you.
Ms. Rainey, you need redirect.
No redirect.
Ms. Poole, Mr. Brazino, thank you for your testimony this afternoon, and you may stand down.
Thank you, ma'am.
Ms. Rainey or Mr. Mustian?
Thank you, Madam Vice Chair. ORS would call as its final panel Mr. Brandon Bickley and Mr. Omari Thompson.
Mr. Thompson, if you would raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. Bickley, do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Mr. Bickley, we'll start with you. Could you please state your name for the record?
My name is Brandon Sinclair Bickley.
And by whom are you employed and in what capacity?
I am the Regulatory Manager in the Energy Operations Division for the South Carolina Office of Regulatory Staff.
Mr. Bickley, in connection with this proceeding, did you prepare or cause to be prepared 8 pages of direct testimony?
Yes, I did.
Okay. And on May 31st, 2022, did you prepare or cause to be prepared 8 pages of revised testimony that corrected certain errors in your original testimony?
Yes, I did.
Okay. Okay. Do you have any other corrections, additions, or deletions to your revised direct testimony?
No.
Okay. If I were to ask you those same questions set forth in your revised direct testimony, would your answers be the same?
Yes.
Madam Vice Chair, I would ask that Mr. Bickley's revised direct testimony be entered into the record of this proceeding as if given orally from the stand.
Mr. Bickley's revised testimony, direct testimony, will be entered into the record as if given from the stand.
Mr. Bickley, did you also file 5 exhibits identified as Exhibit BSB 1 through 5 in connection with this proceeding?
Yes, I did.
And again, on May 31st, 2022, did you make certain corrections to those exhibits?
Yes, I did.
Do you have any additional corrections, additions, or deletions to those exhibits?
Yes, just one.
Okay, could you explain those corrections at this time?
On revised exhibit BSB-5, footnote number 1 should read 0.6956%.
Okay. And Mr. Bickley, does that correction change any of your recommendations in this proceeding?
No, it does not.
Okay. Other than that change, do you have any other corrections that need to be made?
No.
Okay. Madam Vice Chair, I have copies with me of the corrected version of Mr. Bickley's BSB 5, if that would be helpful, or if you would prefer to just note that on your copies, either way, whatever's easier.
I think that would be helpful to have those, please distribute to the parties as well. And may I ask Mr. Bickley to give that amount again, or that change?
Yes, Commissioner. So on footnote number 1 on BSB-5, it should read 0.6956.
Ahead. Okay.
Madam Vice Chair, with those corrections, I would ask that Mr. Bickley's revised exhibits BSB 1 through 5 be entered into the record as the next hearing exhibit.
Mr. Bickley's revised exhibits BSB 1 through BSB 5 as corrected today will be marked for identification as hearing exhibit number 12. This will be a composite exhibit and it will be entered into the record of this case.
Mr. Bickley, have you prepared a summary of your direct testimony?
Yes.
Okay, could you provide that at this time, please?
Absolutely. Good afternoon, Vice Chair Belzer and members of the Commission. My testimony sets forth ORS's findings and recommendations resulting from our examination of Duke Energy Progress's fuel expenses used in the generation of electricity to meet its South Carolina retail customer requirements. ORS examined various fuel-related documents as part of our review. These documents address the company's fuel, environmental, and purchase power expenses for the actual, estimated, and forecasted periods. In preparation for this proceeding, ORS analyzed the company's monthly fuel reports and examined the company's contracts for nuclear fuel, coal, natural gas, fuel oil, transportation, environmental reagents, and purchase power. ORS also evaluated the company's policies and procedures for fuel procurement. ORS met with company personnel from various departments on multiple occasions to discuss and review the company's fossil and nuclear fuel procurement, fuel transportation, environmental cost and compliance procedures, forecasting, and general company policies and procedures regarding fuel procurement. ORS reviewed the company's projected sales and analyzed them with regards to the projections from its last fuel proceeding and the actual sales from the actual period. ORS found the company's sales projections to be reasonable and in line with historical sales data. ORS reviewed the company's forecasted cost for nuclear fuel, coal, natural gas, fuel oil, transportation, environmental reagents, and purchase power for the estimated and forecasted periods. ORS compared the monthly projected costs to historical projections, actual data, and commodity prices from numerous industry publications. ORS found the company's forecasted costs to be reasonable. Should the Commission approve the rates as proposed by the company, the average monthly bill for a residential customer on rates RES using 1,000 kilowatt hours would increase from $122.86 to approximately $132.99, a net increase of $10.13 or 8.25%. For general service non-demand, general service demand, and lighting customers, the proposed rates would increase the average monthly bills by approximately 6.8%, 11.9%, and 3.6% respectively. This concludes my summary.
Thank you, Mr. Bickley. Mr. Thompson, your turn now. Could you please state your name for the record?
My name is Omari Rashad Thompson.
Okay, and by whom are you employed and in what capacity?
I'm employed by the South Carolina Office of Regulatory Staff. I'm a regulatory analyst.
Mr. Thompson, in connection with this proceeding, did you prepare or cause to be prepared 7 pages of direct testimony?
Yes, I did.
Okay, do you have any corrections, additions, or deletions to your direct testimony?
No, I do not.
If I were to ask you those same questions, would your answers be the same?
Yes.
Madam Vice Chair, I would ask that Mr. Thompson's direct testimony be entered into the record of this proceeding as if given orally from the stand.
Mr. Thompson's direct testimony will be entered into the record as if given from the stand.
Mr. Thompson, did you also prepare and file 6 exhibits identified as Exhibit ORT 1 through 6 in connection with this proceeding?
Yes, I did.
Okay, do you have any corrections, additions, or deletions to those exhibits?
Yes.
Could you explain those at this time, please?
Yes. Exhibit ORT-2 had a typographical error that did not affect my review in any way.
Okay. Are there any other corrections to your exhibits?
No.
Madam Vice Chair, as with Mr. Bickley's, I have copies of the corrected version if that would be helpful for the commission.
Thank you. Could we ask that he identify where the typo is?
I'm sorry, Mr. Thompson, could you direct us exactly to where the typo is on ORT-2?
Absolutely. So on ORT-2 under outage type for unit mail 1, the second row, it says planned as outage type. It should say extension. And also for unit Roxborough 3, the last one, the last row, it says planned under outage type. That should also say extension.
Okay. Thank you, Mr. Thompson.
You're welcome.
Madam Vice Chair, with those corrections, I would ask that Mr. Thompson's exhibits ORT-1 through 6 be entered into the record as the next hearing exhibit.
Mr. Thompson's pre-filed exhibits ORT-1 through ORT-6, which includes the revised ORT-2, will be marked for identification as hearing exhibit 13 and entered into the record of this case.
Thank you, Madam Vice Chair. Mr. Thompson, have you prepared a summary of your direct testimony?
Yes.
Okay, could you provide that at this time, please?
Sure. Good afternoon, Madam Vice Chair Belzer and members of the Commission. The purpose of my direct testimony is to set forth ORS's recommendations resulting from ORS's examination and review of Duke Energy Progress's power plant operations used in the generation of electricity to meet the company's retail customer requirements during the review period. In preparation for this proceeding, ORS examined various fuel and performance documents related to the company's electric generation and power plant outage and maintenance activities. ORS analyzed the company's monthly fuel reports, including power plant performance data, heat rate data, unit outages, and generation statistics. ORS also monitored electric generation statistics through industry and governmental publications. ORS attended, via virtual participation, the Nuclear Regulatory Commission's 2021 annual assessment meetings for the Sheeran-Harris, Brunswick, and Robinson nuclear plants. Additionally, ORS met with company personnel from various departments to discuss and review the company's electric generation, power plant outages, and maintenance activities. Based on ORS's review of the company's operation of its generation facilities during the actual period, ORS determined that the company made reasonable efforts to maximize unit availability and minimize fuel costs. ORS found the company's plant outages to be reasonable based on ORS's review of the outage data from the actual period, forecasted outage data from docket number 2021-1-E, historical outage data from previous annual fuel proceedings, and industry experience. ORS also found the company's maintenance schedules and projected performance data for its power plants for the estimated and forecasted periods to be reasonable. This concludes my summary.
Thank you, Mr. Bickley. And Mr. Thompson, please answer any of the questions that the parties or the commissioners may have.
Thank you, Mr. Mustin. Nucor. SACE CCL.
No questions.
Duke Energy Progress?
No questions.
Commissioners?
Madam
Commissioner
Vice-
Thomas?
Thank you. Good afternoon, gentlemen. Just have one question for you, Mr. Bickley, and this is pretty much along the same lines as what I asked Ms. Harrington earlier. So that's in connection with your Exhibit BSB4 and the capacity under recovery of a little over $6 million. Given that that's a big number compared to the relative numbers in prior years, is there any information that you can provide in terms of what are the major drivers there?
Sure, Commissioner. I'd be happy to try to answer your question. I think the first thing I'd point out is, so BSB-4, in general, this is a snapshot in time of the balances for those years, for those review periods. And the $6 million you refer to, if you compare that to last year's proceeding, where it was approximately $5 million, the $1 million increase between the two is relatively similar to what you see looking back from February 2015 to now. So you can see some oscillation there, but relatively 500,000 to $1 million, so relatively similar. The big jump you see was in the last fuel proceeding, where it went from just over 2 million to approximately 5 million. So generally speaking, for this fuel proceeding, that 6 million increase it's not a 6 million increase, it's a 1 million difference between last year and this year, essentially. So that doesn't necessarily jump out. That looks very similar to some of the past years. So I just wanted to point that out to start. And then if you reference Exhibit ADB7, which is Witness Brazino's Exhibit number 7, that shows you the capacity costs, the actual values, and what you're looking at in his Exhibit ADB-7. It would be the first two lines where it's PURPA purchase power capacity costs and the natural gas capacity costs. So to refer you to those two lines, that's where the actual hard data comes from, will be Mr. Brazino's exhibit. And you can see where the PURPA purchase power, you can see where there are some increases there that mostly deals with renewable resources, solar being one. So you can see where some of those costs increase. Or not costs, but where you can see some of those are higher values, particularly in the summer where you have more solar online. But Witness Brazino would be better able to answer his exhibits than I would. But I did want to point that out to you so you could see where those numbers were referenced.
Okay. Thank you. So, Mr. Brazino, anything to add to that?
Witness Brazino was on the last panel.
Oh, I'm sorry. Didn't see the name for it. Yeah, okay.
Commissioners, any further questions, this panel?
Madam Chair?
Commissioner Williams?
Thank you. I appreciate it. Mr. Bickley, I have one question for you, and it might be a shot in the dark, but are you aware of what the inflation for the past year or so in the United States has been?
Relatively aware. Yes, ma'am.
Is it anywhere like what is being requested in terms of the increase on the residential cost?
So I would say that in general, we are seeing unprecedented times, not just with inflation, but you're seeing trends in the market as we come out of COVID, or I guess where we are at COVID is more that I'm not an expert to talk about where we are at COVID. But if you look at the relation to either we're in the end of COVID or we're out of COVID, we're still seeing some of those effects. You're seeing inflation, you're seeing logistics and labor issues. And so that's why I would qualify we're in unprecedented times, seeing some of the conditions we see in the market. And a lot of that does directly impact the increase, because the increase deals with the increase to natural gas prices, as well as the under-recovery, which the under-recovery was also driven mostly by natural gas prices. Does that answer your question, Commissioner?
It's fine. Let me see if I have any others for you. I think I do not. Mr. Thompson, I think I read a recommendation in your testimony. Would you like to give it to us? It's on page 7. Do you need me to repeat? The sound's a little awkward right now.
Yes, ma'am, Commissioner. I did have a recommendation. And my understanding is that the language is added there basically so we should an outage span past the review period, we reserve our right to address it by the next hearing. Though we review all outages, it ensures our right to be, appraised of any ongoing information.
Thank you very much. That was it.
You're welcome.
No further questions.
Thank you, Commissioner Williams. Mr. Thompson, since this is your first time, I'm not going to let you get away unscathed here. So, with regard to ORS's review of outages and your discussions with the company and documentation from others, did ORS identify any failure or mistake by the utility to minimize fuel cost or that would affect availability of any of the units you reviewed?
No, we did not find that.
Okay. How would you characterize the utility's performance with regard to outages? The company indicated on a couple of their nuclear outages that refuelings were the shortest for those units. So how would ORS characterize the utility's work on outages?
We would characterize it as exemplary.
Okay. Thank you very much. And similarly, Mr. Bickley, has there been any indication that the utility may have failed to do their best efforts in minimizing fuel costs?
No, Commissioner. Our review of their policies, procedures, the numerous meetings and discussions we had on their fuel procurement practices, as well as their forecasting practices, we determined to be reasonable and found no issue.
Thank you very much.
Yes, Commissioner.
Commissioners, any further questions from this panel?
Madam Chair,
Commissioner Williams?
I found my remaining question.
Okay, please go ahead.
Thank you. I'll ask this of both panelists, but I think it comes out of Mr. Thompson's testimony. On your exhibit 1, ORT 1, that is where there's a table that talks about the difference between the company's average availability factor and the average net capacity factor, and the lag with the NERC 5-year average for coal plants. We had some discussion about that earlier with the company, and I wondered what you would add to that discussion. Does it indicate concern with the reliability issues?
No, we reviewed all outages. We spoke directly to company personnel, and we found the outages and the factors to be reasonable. The FOF speaks specifically to the outage data. We found a number of outages, particularly for the coal plants that lasted, a significant period of time. And, that factored into why that number differs from the NERC value. But there are a number of different reasons why that's the case, or that the NERC value doesn't mirror DEP's value, not the least of which is the NERC value is a 5-year average, whereas DEP's number is a 1-year snapshot. I'd also say that DEP has a diverse fleet, nuclear, coal, natural gas, hydro, and other renewables. Other utilities that go into the NERC value may not have that diverse a fleet. Also, there's a reliance on other fuels. I believe the generation mix for DEP is only 8.65%, depending on coal. I believe it's near 43% nuclear and 32.5% for natural gas. So those are just some of the reasons why that NERC value doesn't necessarily mirror DEP's number. But we did find the factors to be reasonable. That NERC value is not a limit, so there are numbers that can be higher or lower depending on the utility.
Thank you very much, Mr. Thompson. I appreciate it.
You're welcome.
Commissioners, any further questions? Hearing none. Mr. Mustian, any redirect?
No redirect.
Gentlemen, thank you for your testimony this afternoon. You may stand down.
Nothing further from ORS.
Thank you, Mr. Mustian. Ms. Brown, anything further from the utility?
Nothing further from DEP.
Nucor? Say CCL?
Nothing further from us, thank you.
Thank you very much. Thank you all. Ms. Hill, do you have some instructions for us?
Yes, ma'am. Thank you, Madam Vice Chair. At the request of parties, the transcript is going to be due and will be sent to those who have requested them on June the 10th. The proposed orders are due on June 17th per order 2021-57. And the final order is due to be issued by the Commission no later than June 30th, 2022, as the rates are effective Friday, July 1st.
Thank you.
Thank you, ma'am.
Proposed orders are, that's Friday week, and there is no commission just be aware there is no commission business meeting next week, I don't think. I think that's my recollection. So
Yes,
this
ma'am.
would be on the agenda for the meeting the week of June 20th, I believe.
Yes, ma'am. That would be June 23rd, Commissioner.
Okay, thank you very much. So that's when we anticipate having it on the agenda, just so you're aware. Is there anything further before we close this proceeding? Last chance here. I'm not always this gracious to give you the last chance. But parties, I'd like to thank you for, as always, excellent presentations by all of you, and your congeniality and professionalism certainly make our job a lot easier, so thank you very much. And with that, we will close today's proceeding and hear from y'all shortly, and then you will have our decision at that meeting later in the month. Thank you.